Hey everyone, welcome back to Corporate Decoder. Today we are cracking open Boqii Holding Limited's latest filing. It's like opening a can of pet food. You never know what's really inside. We'll see if they're digging themselves out of the doghouse. This report outlines a proposed resale of shares by some existing shareholders, which means we will analyze what this means and see how healthy Boqii is. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. Also, we've set up a Discord community, so come join the conversation. Link is in the description below. Scrolling States, Securities and Exchange. Common Scroll, Communities and Exchange, Common Scroll, tous all rights. So this is amendment number 3 to their initial filing form. This document is focused on allowing current shareholders to resell their shares. It's not about Boqii raising new money directly. The selling shareholders are offering the shares, unlike an IPO. There is no investment bank involved here. Boqii is a Cayman Islands company with its main offices in Shanghai, China. So before we go in further, it's important to keep in mind we are dealing with different legal and business landscape than you find in America. Scroll preliminary prospectus dated June 17, 2025 scroll. This is a preliminary prospectus. This report is not final. What that means is they may not be able to sell the security yet. It is not soliciting to sell these securities in any state where the offer or sale is not permitted. They also classify themselves as an emerging growth company. This means they get certain exemptions from stricter reporting rules. One thing to note is that emerging growth companies are not required to comply with the auditor attestation requirements of Section 404 of Sarbanes-Oxley Act. Now, this is important. The investors are purchasing securities of Boqii, the Cayman Islands holding company, and not securities of Boqii's subsidiaries or the VIAs that conduct substantive business operations in China. The VIA structure is used to provide investors in China-based companies, where Chinese law prohibits direct foreign investment in operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity interests in the Chinese operating companies. This involves unique risks, and investors may never hold equity. There are new trial measures for overseas securities offering. As of the date of this prospectus, no relevant PRC laws or regulations in effect require that we obtain permission from any PRC authorities to issue securities to foreign investors. Essentially, any action on China regulatory's part could affect the value of the company's securities. There can be some trading prohibition on Boqii's securities if the Public Company Accounting Oversight Board, PCAOB, determines that it is unable to inspect or investigate completely our registered public accounting firm, and as a result, US national securities exchanges such as the NYSE American may determine to delist our securities. As such, we are now passing through the first page, which has the date as June 17, 2025. Let's dive into what's on sale with these ADSs. Okay, let's scroll down to see what their business actually is. Boqii states that it is a leading pet-focused platform in China that offer a one-stop destination that pet parents in China may go to get everything they need for their pets. They have a large pet-focused online community in China's pet market. For the year ended March 31, 2024, there were approximately 5.3 million. And for the 6 months ended September 30, 2024, approximately 2.0 million active buyers. But there's a slight problem in the numbers, as we'll see soon. They generate revenues primarily from transactions completed on our online sales platforms. During the 6 months ended September 30, 2023 and 2024, net revenues generated from the sale of products were RMB 374.1 million and RMB 23.7 million, accounting for 96.1% and 93.2% of the total net revenues for the corresponding periods. What this means is product sales are down significantly. Let's look at what they actually made. Their total net revenues were RMB 1,092.1 million and RMB 709.4 million, US 98.2 million to NT 824. What this means is their sales have gone down almost 35% this year alone. That is not what we are looking for, as a company can't operate like this for very long. That is not what we are looking for, as a company can't operate like this for very long. They recorded a net loss of RMB 106 million and RMB 68.9 million for the year ended March 31, 2023 and 2023. And 2024, however, at least their losses are shrinking. In the short-term view, while their revenues decreased, their losses also decreased. And the total net revenues decreased by 35.9% from RMB 389.4 million to RMB 29.6 million for the 6 months ended September 30, 2023 and 2029. For the 6 months ended September 30, 2023 and 2029, 04 million to RMB 2049.7 million for the 6 months ended September 30, 2023, and these 6-month periods, the recorded net loss decreased from RMB 37.7 million for the 6 months ended September 30, 2020, 2024. Here they believe these strengths contribute to the success: leading pet-focused platform in China, riding on market tailwinds, expanding offline network, a vibrant user community, and that they have a visionary founding team and experienced senior management going forward. They plan to continue investing in growing content, improving user experiences, and enriching the pet-focused ecosystem. As they continue to deliver compelling value propositions to their users and customers, their pet, small and medium pet businesses, and their business partners. But what are the challenges? Let's look at what they report in the filing. A few things we can point out is their difficulty in finding profits, diversifying monetization channels. They are subject to the changing preferences and needs of their customers. A lot of legal and operation risks, especially relating to China, and that they operate in an intensely competitive industry. So the corporate structure of the firm is fairly standard for a Chinese listed company. They have a holding company incorporated in the Cayman Islands. They use the variable interest entity or VI structure to allow foreign investments where Chinese law prohibits it. This structure involves unique risks to investors. In September of 2023, share capital was increased to US 20,000. Here is a good section to go over the financial numbers of their cash and cash equivalents decreased from around RMB 73 million to around RMB 46 million. AF, their receivables also went down L. What this means is the numbers here are not looking very good. Let's compare earnings. Net revenues are down from 389 million to 2049 million. Not a good sign here. Even their third-party sales revenue is down, meaning the sales partners are making less. Net loss has, however, decreased from RMB 37,000 to RMB 27,000, roughly, which isn't anything impressive. During the past 3 completed fiscal years, none of their subsidiaries have made any dividends or distributions to Boqii Holding Limited, and neither has Boqii Holding Limited made any dividends or distributions to their shareholders or subsidiaries. Now let's take a peek at the risks that are involved. Thus, this part goes over potential risks for investors of Boqii. So if you are one, you might want to listen to this section, RTA. Big one is uncertainties with respect to the PRC legal system, the risk that the Chinese government may intervene with or influence the operations, or may exert more control over offerings conducted overseas. The funds may not be available to fund operations or for other use outside of the PRC Accession Number. If they fail to acquire and retain new customers, that could lead to issues. Again, it mentions here the Chinese government may intervene or influence their operations at any time. Here's some strategies they hope to utilize are optimizing product mix, growing content offerings, develop membership programs, enhance the Boqii ecosystem, and pursue M&A and strategic opportunities. There's another risk. Trading in their securities will be prohibited under the HFCA if the PCAOB, the Public Company Accounting Oversight Board, determines that the company is unable to inspect or investigate completely our registered public accounting firm. And as a result, US national securities exchanges, this could cause the company to be delisted from the NY and strategic opportunities. There's another risk. Trading in their securities will be prohibited under the HFCA if the PCAOB, the Public Company Accounting Oversight Board, determines that the company is unable to inspect or investigate completely our registered public accounting firm, and as a result, US national securities exchanges. This could cause the company to be delisted from the NYSE American. There has been steps made to investigate complete issuer audit engagements, so this isn't an immediate action. User proceeds. This perspective is related to the resale of shares by the selling shareholders. They will not receive any proceeds from the sale of the ADSs. Any net proceeds will go to the selling shareholders. Alright, let's take a look at the beneficial ownership. The top guys in company. Liang only controls 5.9%. However, since they had Class B shares, their voting power is over 40%. Finally, we go over the same highlights where they state that Boqii offers a one-stop destination for everything customers need. This also talks about that the number of active buyers are down. Let's move on to the financial part of the report to gain deeper analysis. Diving into the numbers, it becomes grim. We can see that all areas are down and struggling. Total revenues decreased by 35.9%, mainly hurt by the decrease in the revenue from product sales, which represents approximately 93% of net revenues. Net loss decreases as part of cost-saving initiatives. They do not expect this year's operating results. Our company continues to offer a number of new product offerings, solutions, and expansion plans for marketing. While there are a few factors, nothing major to take note. It is still important to know that the industry has an effect on the performance of such a corporation. Boqii depends on the customer base to stay above and beyond the market. If they do not, they will face significant risks if they fail to do so. In relation to this, our findings are mixed. To summarize this company's filing, here's my take. There's some serious headwinds here. Sales are down, profits are hard to find, and there's a lot of reliance on a Chinese legal structure that could change at any moment. On the plus side, they are making efforts to become profitable, reduce costs, and those private labels could be their ticket to higher margins. However, there is too much uncertainty, and I would avoid this company at all costs. Alright, that's my breakdown of Boqii's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. See you next time.